All right, I think we're live. Howdy, guys. Jimmy Song here. Welcome to another episode of Bitcoin Tech Talk Q&A. As usual, this is the show where I go over my newsletter, which comes out every Monday morning, and it goes over all of the stuff that happened in the past week in the world of Bitcoin. Anyway, welcome to the show. I have a bunch of things to share with you today, and I will be doing a reading of at least one of the stories. So let's take a look. Once again, you can subscribe to my newsletter using the links below. And it's something that I put out every week. I'm up to 168 issues now, which is kind of crazy. All right, a few things to show. The Little Bitcoin book is, of course, available on Amazon, and it is available on paperback, Kindle, and audiobook. And yeah, it's fairly affordable. It's got 52 customer ratings. Wow, 52, huh? I didn't even know it was that many. I should click helpful for more people. All right, so it's got like 52 ratings. Lots of people that are rating it. It's also available in Spanish for Kindle and paperback, and it's also now available in Portuguese. O pequeno livro do Bitcoin, por que Bitcoin importa, yeah, etc., etc. Anyway, yeah, we will be having more editions. I think Hindi is pretty close to release. Arabic and Turkish should be out fairly shortly. We have Korean in the works, Mandarin in the works, Vietnamese in the works, German, French, Dutch, all in the works as well. I think Russian as well. So we want to get this out to absolutely everybody as soon as possible. So that's a Little Bitcoin book. Once again, it is available on audiobook, and it has 15 ratings. Wow, I didn't realize there were that many. I should click helpful for all of these. But yeah, lots of people rating it on there as well. Here's my other book, Programming Bitcoin: Learn How to Program Bitcoin from Scratch, first edition from O'Reilly. It is available on Amazon for $41. All right. Yeah. Oh, one more thing. Programming Bitcoin. I think that's two M's. Yeah. Coin.com. And this is my website. If you are interested in taking my seminar, we'll be in Las Vegas February 20th and 21st. That is where we're going to where you're going to be able to learn from me. It's a 2-day, very intensive seminar. You don't have to know anything about Bitcoin. I will teach you pretty much everything as long as you know how to program Python. All right, so let's get on with it. Let's take a look at some of the stories on our list. We got a bunch of them today. A lot of them have sort of a year-end flavor, like this one from Aaron Van Werdum. It's for Bitcoin Magazine. Bitcoin's 2019 in tech, what this year has brought us. Let's see. It starts with Guix, which I didn't expect him to be highlighting, but this really cool project from Carl Dong to make sure that the entire stack for compiling Bitcoin Core is trustworthy. And he did a deep dive. He had a really good presentation in Amsterdam about this. And he showed how having even one part of the tool chain compromise could compromise the whole thing, and he showed some examples of that. And now it's using Gideon and well, actually, it was using Gideon, but doing something else. And Carl's been doing great work on that. He's also taken my class, by the way, and he works at Chenko Labs. All right, side chains increase asset offerings. So RSK and Liquid have a bunch of different assets on their platform. I mean, they're still centralized, of course, but the fact that you can do it more anonymously and sort of not spanning the main chain and stuff like that makes for a more interesting use case than, say, something like Ethereum, which has like tons of hard forks and stuff like that. We'll be talking about that later. Shamir backups for more secure storage. Yeah, I mean, Shamir's been around. I mean, we had that at Armory back when I was there, so it's not like it's anything new. But they have made it a lot more convenient with Satoshi Labs' announcement on Trezor. Pay to endpoint. This is an interesting breakthrough that they've come up with as I mean, I think Samurai has a version and so on. It's more privacy tech, really interesting stuff. Mini script, still, like it hasn't quite been deployed, but like the spec is out and you can compile it to script and it can find sort of more efficient ways of doing particular things and so on. So I expect mini script to become more prominent as use of pay to witness script hash and things like that become more prominent. So that's a really good review. Encourage you to read all of it and dig into some of this stuff if any of it sounds interesting. That was the Bitcoin Tech Year in Review. This is another one. This is from Binance Research, Bitcoin mining allocation. So this is seeking to answer the question, why is the hash rate sort of the way it is between Bitcoin, Bitcoin Cash, and Bitcoin SV? As you know, all of them use double SHA-256, or what we in Bitcoin call hash 256, as the proof of work mining algorithm. So, it's a pretty comprehensive research report starting with just sort of like how ASICs have completely dominated. This is a log chart, so like going up on this graph is like an order of magnitude. So it's kind of incredible how things have gone up in terms of mining difficulty. I think it's currently at around 13 trillion, which is kind of an insanely large number. But that means, at the very beginning it was 1. So it's 13 trillion times more difficult now than it was when Satoshi was mining. So kind of crazy, but that's the way it is. This is the ASIC era, and since January of 2015, just sort of terahertz per second. ASICs have improved significantly. This isn't a log chart, but it is sort of increasing linearly, roughly speaking. Let's see, and then it goes into the different forks: BTC, BCH, and BSV, and sort of the prices versus the actual. I think lower down they have, like the hash rate, like from August 1st to December 31st, 2017. And then sort of the mining reward to difficulty ratio, sort of like the profitability and so on. And the aftermath analysis, reward to difficulty ratios more or less stayed exactly the same on both. So in other words, miners are going, doing the economically rational thing. And then BSV comes in, and what's interesting about BSV is that it tends to not mine necessarily very economically rationally, and you can see that in, oh gosh, did I skip the graph already? So cumulative estimated cost of opportunity to mine BSV instead of BTC. So all of that hashing power on BSV, it's whoever is mining BSV, they've lost, like, cumulatively they've lost like $12 million, which is kind of it's kind of mind-boggling why that would happen. But it's asking some good questions. It does some good analysis. Good on Binance Research to do all of it. Encourage you to read all of it. All right, let's take a look at the next one. This is from Bull Bitcoin, and they are, of course, an exchange out of Canada, and they now have a recurring buy feature, which is very convenient for dollar cost averaging. So for somebody that wants to get into Bitcoin, but don't want to buy it in one lump sum because they might be buying too high and so on, dollar cost averaging kind of helps to accumulate in a reasonable manner, and they've made this possible using this tool that they have available to Canadian customers. I think there are services in the US that are working on this as well, so stay tuned. I think this will be the way in which people accumulate Bitcoin, and if the number of people dollar cost averaging, or the amount being dollar cost averaged every day, exceeds the amount of new mining Bitcoin that are coming in, then at that point you're going to see price rises that go crazy. So just something to think about. All right, and Bitcoin's eternal struggle. Interesting article from Gigi. I think that's how you pronounce that guy's name. Or I guess it's just Gigi. but yeah, it's talking about entropy and how Bitcoin has this struggle to um, create, like, basically make a better to into becoming a currency, basically, or becoming the world reserve currency. And yeah, it's he's part of, like, I guess, the Bitcoin Times full guide and stuff like that. So yeah, interesting article. It's a little hard to explain. Encourage you to read it to find out. All right. So Lightning has a couple of developer discussions that are interesting. Lightning in a Taproot future by Z-Man. By the way, ZMNSCPXJ, apparently that's like base 64 for some profane word or something. I haven't actually decoded it in base 64, but that's where the name comes from. But everyone just calls this guy Z-Man. He recently got funded by Square to do work by staying anonymous. Anyway, goes through the initial Poon Dryja Lightning channels or payment channels, which and then adding Schnorr to it, which will be available with Taproot. Composable Musig, which Musig is the Blockstream, from the Blockstream paper about how you can basically aggregate signatures and pub keys, and then point lock, time lock contracts. Lots of interesting ideas here in this paper, or mailing list post about what Lightning can use from Taproot to make things simpler. And there's certainly a lot of different things, including not making it 2 of 2. You can have it be just a Schnorr signature, and I think you can do it as a pay-to-witness script hash, but not even a pay-to-witness script hash. I guess it could be pay-to-witness pubkey hash if you can do it in Schnorr. Anyway, so interesting stuff there. That way nobody knows that it's a Lightning channel, for example. Let's see. And the other mailing list one is faking Lightning Network transactions to roadblock chain analysis. Doesn't make any sense. And there's a bit of a discussion on the mailing list about that. So interesting stuff. A lot of people are thinking about privacy, obviously. I had an article this week about, I guess I put it to the wrong one, but yeah, so those are my stats and not the actual article. Let's see if I go to stats and then I can review this story. So I wrote this article earlier in the week, and I'll read this real quick as a way to sort of explain it. I also want to read the Greg Maxwell thing, so we'll talk about that in a little bit. But blog.bitco announced that because BSV is ending pay-to-script hash, they're going to no longer support pay-to-script hash come February 4, 2020, which is when the BSV hard fork is scheduled. They're literally getting rid of BSV. Pay-to-script hash on BSV, which is crazy. I guess you're going to have to use bare multisig or something for multisig kind of stuff, but that's what they're planning. CoinList is CoinFloor is delisting everything except for Bitcoin, including Bitcoin Cash and Ethereum. And that is very interesting. They're one of the older exchanges. They don't have the highest volume, but these two are what inspired me to write this article, Why Exchanges Delist Coins. All right, so this is something that I also want to read through. This is from Greg Maxwell. Massive replay theft coming to a scam chain near you. Bitcoin scam version. I like his alternate renaming of BSV. And we'll talk about exactly what he says, because as usual, whenever Greg posts something, every sentence has like a lot packed in, so you have to be very careful reading it, or read it through like 3 or 4 times like I usually have to in order to understand what the hell he's saying. So all right, so we'll talk about that in a minute, but before I do that, let's see if there are any questions. I don't see any, but we will go through some of my tweets from the past week. There haven't been quite as many because I did this show last Tuesday. So let's talk about some of those. All right. So all right. It would be interesting to see how Ethereum would handle a 2x like event. I'm sure businesses could pressure ETH much more easily than ETH Central Community would probably bend over backwards to help them. And basically, this is on the heels of the news that Ethereum is going to hard fork again because they screwed up on the difficulty adjustment. So they had this thing called like the difficulty bomb. They forgot to move it in the part as part of the last hard fork. So miners are not getting as much reward as they were expecting. So in order to fix that, they have to do a second hard fork, and it turns out that it's going to be January 1st. Why would you do it then? But I don't know. But they're planning to do a hard fork January 1st, and Udi here is asking like, why aren't the businesses like demanding that they not do that? Because that's a lot of work for a business to have to, look through the code. And I'll go through this in my article and make sure that it's valid and they get the right binary and all of that stuff. Instead, they're just sort of like, the Ethereum Central Committee just sort of gets to dictate what's going on. And my wondering is, like, how would they handle a 2x like event? If the exchanges sort of demanded certain things from Ethereum, could they get concessions? And my guess is yes, they would. All right, today I learned about vanity sizing, the term for how clothing manufacturers keep shrinking sizes to get people to buy. So this is mostly women's clothing, but it turns out that a lot of clothing manufacturers like up their sizes or down their sizes a little bit. So size 12 in 1937 is the equivalent of size 0 today. So size 12 became like size 6 by the 60s, and size 6 became size 0 today. And it's essentially making women feel like they're getting skinnier by sort of deceiving them with pretending that they're getting skinnier when they're actually not. It's the clothes that are getting bigger, and that's kind of how fiat money works. And it was something that I wanted to point out in that tweet. It's a lot like fiat money, fiat clothing, in other words. All right, I'm seeing a pattern. BCH removed SegWit, added larger blocks. BSV removed pay to script hash, added even larger blocks. BCW, Bitcoin Craig, remove pay to pub key hash, go to pay to pub key, add gigameg blocks. BCA, Bitcoin Calvin, remove public key cryptography, add teragig blocks. So I mean, Bitcoin Cash basically removed SegWit. Bitcoin Satoshi's Vision removed pay to script hash, or they're about to. I expect it to keep going, which would eventually just end in a giant centralized database where you can probably have teragig blocks or something. Just that's a logical endpoint, I guess. Here's another one. Bitcoin does not owe you a business model. Exchanges do not owe an altcoin liquidity. Central committees of altcoin do not owe you a working product. The market does not owe you price stability. The entitlement mindset is poisonous, and you'll make better decisions. A lot of Bitcoin companies, expected their business model to continue as fees got larger and stuff like that. And that was why I wrote Bitcoin does not owe you a business model. Hat tip to Ben Davenport for that. Exchanges do not owe an altcoin liquidity. And altcoins kind of expect that. But, liquidity is everything, and they don't have to provide it to you, right? And that's unless maybe they got bribed into doing it, and maybe they do actually owe it. Central committees of altcoins do not owe you a working product, and this is the sad reality of ICOs. And market does not owe you price stability. This is for all the no-coiners that complain about price volatility. That's just not how the market works. Contenders to the Bitcoin maximalist throne: token sales, blockchain not Bitcoin, Ethereum, SegWit2x, BCH stablecoins. Those predicting the imminent demise of Bitcoin are much more often facing the same demise themselves instead. Yeah, all of those things are dead or dying as we speak. There's an interview I did in Korea. It's all in English in case you're curious. It was a fun interview. All right, progress. Today versus May 12th, 2019. Bitcoin is up 3%. I think it's up more now. Just about everything else down significantly. XTZ and BSV are the exceptions. Litecoin, EOS, Cardano, Stellar, and Dash are all down more than 50% since May of this year, which is kind of crazy, right? Like this is what it looks like today. It's seven. Well, it's more than that now. But I mean, look at these numbers, right? Like it's kind of crazy. And then you can take a look at what it looked like just like 6 months ago, 6.5 months ago. And actually about 7 months ago. It's like Bitcoin Cash was $350, right? Like now it's like 190 or 180, something like that. Litecoin was $84. It's trading at under 40. And like all of these things have gone down tremendously. And that tells me that the market is becoming a lot more rational about these things and realizing that these altcoins don't really matter. We'll talk about why exchanges delist Bitcoins. I did do a debate with David Garrard, which you can listen to and vote on if you're so inclined. Unpopular opinion. The people investing in Ripple, the company, are counting on XRP as their safety net. XRP could drop by 98% and there would be enough Ripple to make them whole. Now, they're quote unquote valued at $10 billion or whatever. But the people that put in 200 million, they're not stupid, right? They probably have some clause in there. Like we can claw back the money if everything else fails. And essentially they probably have some clause that gives them some rights to the Ripple that Ripple, the company, owns. And using that, they can make themselves whole, even if XRP drops by 98% or something like that. So my point here is that don't believe all of the numbers. It's most likely just like a way to make themselves look better. I mean, the only thing that Ripple has made money on is really XRP, and it's because of people having unit bias and things like that. All right, what's your best I got scammed out of Bitcoin story? Really fun stories on this thread. I think I might make this a thing, like Saturday stories or something, like Story Saturday maybe, and I'll ask for some interesting stories. A lot of people with some interesting stories. People buying altcoins, obviously, hash rate stuff and random things like that. I did post my story in 2014. I bought an Ollie Tin Adam Smith 2 Bitcoin coin and found out a few years later that they kept the private key and got hacked, and the 2 Bitcoins on the coin got stolen. So that's my story. I lost 2 Bitcoin from 2014 due to those scammers at Ollie Tin. Anyway. Here's the next one. Let me spell out what's happening, and we'll go into this a little bit more when we read Greg's post on our BSV. But essentially, if you spend pre-August 1st, 2017, pay to script hash UTXOs on BTC, anyone on BSV can just take them after the next BSV hard fork, because they can take the hash pre-image because that's the only thing it's protected by, and just take them. I'm speculating that it's they forked in order to steal a bunch of value from sort of inactive things or something like that. And I'll go over that in a minute. And I wanted to get some data so I can work on my project. Here's the actual debate poll that you can vote on. I guess more people agree with me, but who knows what the result will be at the end. And here's my final tweet that I published this morning. Lessons from 2019. Publishing a book is just the beginning of the work that you have to put in. And I realized this after I released both my books. I had to go on a lot of podcasts and promote the hell out of it. And that's just something that you have to do. The right community can 10x self-improvement. I'm part of the Bitcoin community. I'm part of a group of people that I can hang with and talk about life with and do life together with. And that's very useful for self-improvement. If you want to improve, go find some friends, basically, that have the same mentality. Hunger, anxiety, and desire are all mental. I did not realize that hunger was all mental until I tried fasting for a long period, and that's something that I can talk about at some point. But anxiety also, like you don't need to drink in order to relieve yourself of anxiety, for example. And desire too. You don't. If you can determine not to want something, you can get past it. Discipline is all about staring at a blank page. This I learned from writing. You just have to be willing to stare at a blank page for a long time and be as bored as possible, so you'll act, and that's oftentimes what gets you to do some amazing things. Bitcoin really does fix this. That really needs no explanation. So yeah, that's it for my Twitter page. Let's do a couple of read-throughs. I'll do Greg's first. All right. So massive replay theft coming to a scam chain near you. Bitcoin scam version. Here, let me make this a little bigger so you guys can see it a little better. The exclusively blockchain of the world-renowned fraudster Craig Wright, Fraudtoshi, has recently announced their latest coercive rule change. The document informally describes the intended changes. 3 of its components interact in an interesting way. Here's the first one. If the transaction which contains the UTXO that is being spent was or will be confirmed in a block before the Genesis activation height, the Genesis activation height is sometime around February of 2020, then the input script and the output script for the UTXO being spent by that input are evaluated according to rules prior to the Genesis upgrade. Yeah, so if it's confirmed before the activation height, then it's whatever rules were there before. If the transaction which contains the UTXO that is being spent was or will be confirmed in a block with a height greater than or equal to the Genesis activation height, then the input script and the output script for the UTXO being spent by that input are evaluated according to the Genesis upgrade. So after the Genesis activation height, which happens around February of 2020, early February, then they're all evaluated according to the Genesis upgrade, according to the new rules. So after a certain block, new rules are in place. That's essentially what a hard fork is. So that's what they're doing. After the Genesis activation, the original signature hashing algorithm, which is still in use on the BTC blockchain, is valid for outputs created before the Genesis activation. All right, so what does this mean? So basically, when Bitcoin Cash forked off of Bitcoin, one of the things that it did was it changed the signature algorithm. And despite their opposition to SegWit, they actually took the SegWit signature hashing algorithm, which is defined in BIP 143. And that's basically the SegWit serialization for the signature hash. Instead of what was before, which is basically defined by Satoshi, and it does this what we'll call sort of the legacy serialization for the signature hash. And so what this is saying is after the Genesis activation, the old way pre-Bitcoin Cash split signature hashing algorithm is now valid. I guess you can still use the BIP 143 style signature hashing, but the old ones will also be valid. Okay, so all right, so that's point number 2 on the rule change there. And the pay-to-script hash script template will not be treated specially for outputs, but will be evaluated normally. Now, if you know about pay-to-script hash, essentially what it does is it has a very special rule that they put in as part of BIP 13, which is that if you encounter a particular sequence, op equal 20 byte hash, or op hash 160, 20 byte hash, and op equal, then whatever came before it, that's the redeem script that gets put into the script evaluation. That's no longer going to be the case. So instead of it being locked to the evaluation of the redeem script, it's now locked purely to the pre-image of the script hash, which is a lot easier if you can just, that has to be revealed whenever pay-to-script hash is spent. It's just called the redeem script. So if you know the redeem script without having to fulfill the conditions of the redeem script, you can actually just redeem it on BSV because they're sunsetting pay-to-script hash. So the combination of these 3 rules means that every transaction Bitcoin made in the future or past spending coins that exist on BSV can be replayed onto BSV post-fork, and any of these replays that create pay-to-script hash outputs will have their outputs collectible by any user of BSV knowing only the redeem script and without knowing any private keys, but realistically, they would be collected by whatever faction of mining can amass 50% of the hash power. All right, so let me parse all of that for you. All right, so anything after the Genesis activation, which will be, I guess, early February 2020, means that if the UTXO exists in BSV, and presumably they only exist if it's before August 1st, 2017. So anything before August 1st, 2017, any UTXO that existed before then, after February 2nd, if those get spent on Bitcoin, then that can be replayed, or anything that creates a pay to script hash output, those can be replayed and then stolen. If it's a pay to script hash output that's spent, then in any way, then they can just take the pre-image and spend it as well on BSV. So in other words, it's taking any coins that haven't already claimed their BSV portion away from the people that haven't claimed them. It's basically stealing all of this money, which is kind of crazy. Either way, either of the P2SH after fork becomes a hash lock, or Bitcoin transactions can be replayed alone would not result in anywhere near the fireworks, because for the former, it would mostly only involve users intending to do that, and in the latter, it wouldn't allow random third parties to take the coins. This should result in a massive influx of circulating coins ready for dumping on the markets, and lots of popcorn for everyone who has steered clear of this mess. All right, so what this is saying is, if you have a pay to pub key hash output pre August 1st, 2017, or and you spent to a pay to script hash or SegWit output, for that matter, well, if it's pay to script hash, then the signature is going to be valid, and that transaction can be replayed on BSV, and the pay to script hash can then be spent just knowing the redeem script. So whenever that gets spent, it's going to be gone. So that'll get basically claimed by people that, people on BSV basically. And Greg, sort of speculates here that it would probably the faction of mining that can amass 50% of the hash power. So this in itself is really interesting, because it does give sort of miners an extra little incentive, at least on that hard fork date, because if they can get more than 50% of the hash power, then they can claim all of that, and they get like this one-time windfall if they can figure out which ones that they can just immediately claim. So, and then maybe they go dump those and do something for that. So, yeah, I mean it's really interesting. Should take So that's the read through on that. Let me read my article as well. Actually, maybe I should save that. Well, all right, I'll read it. If you haven't heard yet, CoinFloor announced the exchange will be Bitcoin only come January 3rd, 2020. That is, they'll delist BCH and ETH and concentrate only on BTC. Similarly, Bitcoin is no longer supporting BSV given their pay-to-script hash rollback coming in a month. This is welcome news, not the least to the poor engineers in charge of having to keep the costly nodes upgraded and running. This is the beginning of a trend, and in this article, I'm going to show all that goes into supporting an altcoin and why an exchange might be delisting certain tokens. The economics of exchange listing. Listing coins on exchanges has a sordid history going as far back as 2013 when BTCE allegedly listed Novacoin in exchange for a significant portion of the pre-mine. Since then, there have really been only three ways to get a coin listed on an exchange. Demand by the customers, bribe by the token central committee, usually the founder or foundation, hard fork demanded by customers. The first is where the bulk of the long-term money is made for an exchange. The commissions on trades are where most of the money comes from, and customer demand is a good proxy for the revenue to be made from listing the token. Bribery is generally a short-term move, as demand, if there at all, tends to not last. Still, the profits can be substantial short-term, especially during bull runs, as the frenzy tends to create crazy price action on the low liquidity coins drawing in traders. Finally, hard forks can create coins that customers want their share of. BCH and ETC were two coins that essentially forced exchanges to at least give their customers their amounts due through what was essentially a backdoor airdrop. These are, again, short-term moves, as after the dump of the coins by people uninterested in holding them, the volume of trades tends to drop off substantially. Revenue. Further considerations for an exchange on the revenue front are that they may be deceived into listing a token through something like an exchange Sybil attack. Verifying that there's real customer demand can be difficult and requires a lot of due diligence, which a lot of exchanges simply don't do. The trading volume after listing is often disappointing for that reason. In addition, trading volume on a newly listed token may also take trading volume away from other tokens, essentially robbing Peter to pay Paul. Finally, liquidity on a per token basis tends to go down as more tokens are listed, as there's only so much money that the customers have. This enlarges spreads, which reduce incentives for trading and ultimately hurt revenue. This is what you call liquidity dilution. In sum, long term, the revenue that an exchange can make off of a token based on hard forks bribery are generally not worth it. Customer demand, however, tends to be better, though even that can be faked or taper off through too many listings. Expenses. The cost for an exchange for listing a token varies. Depending on the nature of the coin, it may be cheap or expensive. It's known, for example, that keeping an Ethereum node up is very expensive, whereas keeping a Bitcoin node up is not. Furthermore, upgrading becomes a real issue when a coin hard forks. Hard forks require downtime and maintenance, which have continual costs. BCH and XMR have hard forks every 6 months. ETH at least a couple times a year, though the upcoming one in 2 weeks was unscheduled. And without upgrading, there's no way for an exchange to verify transactions, and downtimes create bad user experiences. BTC, on the other hand, has never had a hard fork. Thus, it's cheap to maintain BTC support, whereas the maintenance for a coin like ETH is expensive. Ultimately, the complexity of the system upgrades determines the cost to maintain a coin, and at a certain point, it may simply be uneconomical or even impossible to continue support, as we've seen with BitGo and BSV. Risks for an exchange. If the revenues of listing a token outweigh the costs of maintaining a token, it would seem obvious to list it, but that's a short-sighted view. There are numerous security risks associated with listing a token that also have to be factored in. Exchange hacking risk, block reorganization risk, replay protection risk, regulatory risk. Exchange hacking. The history of exchanges getting hacked is legion, and the costs tend to be severe. The hacks can be internal by an employer owner or external by an outside party, or some combination. As listing a coin adds to the attack surface of any exchange, this has to be a major part of the calculation. Perhaps the most famous of these cases is the story of Crypsy, who in 2014 was allegedly hacked by listing a coin whose node software had malware. The creators of the coin apparently used the coin's full node software to get access to the Crypsy systems and then proceed to drain the exchange of 13,000 Bitcoin and 30,000 Litecoin. A security audit of each token's source code is necessary to reduce this risk, but given how much code has to be examined and given that sometimes the code isn't even available to be examined, this is not a common practice. Furthermore, any upgrades to the software should also require separate security audits in case any malicious code was added. Frequent forced software upgrades or hard forks make good security practices even more costly. Block reorganization risk. Another factor for an exchange from a security perspective is the block reorganization risk. That is, a coin may be attacked directly, and attackers may use the exchange as a way to cash out. For example, someone may deposit a large amount of a low hash proof of work token to the exchange, trade them for something more liquid, and withdraw. Afterwards, the token ledger can itself be attacked and reorganized as to cancel the depositing transaction, essentially double spending the coins. This would obviously be very bad for the exchange, as they would be out a lot of money. Though it has not been tried yet, it's also possible that the token's controllers could change their ledger through a hard fork to screw over an exchange. A hard fork completely resets the rules, so it is at least possible in principle to drain an exchange solely through ledger manipulation in much the same way that ETH did with the DAO incident, but with the exchange as the thief. In other words, there's a risk of centralized controllers of these tokens stealing from the exchange through a ledger reset. This may not seem so likely now, but if an exchange is seen as a bad actor, that may be enough justification for a token's controllers to simply change the ledger to the exchange's detriment. Replay protection risk. Another risk is the possibility that a hard fork of a given coin might create a new coin against expectations of the community. ETH split to ETH and ETC in exactly this way back in 2016. Coinbase, for example, did not expect ETC to survive and thus sent out transactions which did not have replay protection and lost a lot of ETC, which they then had to buy to compensate their customers. Regulatory risk. Finally, there are regulatory risks associated with a particular token. AML KYC laws may make listing a privacy token especially hard, for example. Other regulatory concerns might be if a token is considered a security and the burden that might come with qualifying investors. As each jurisdiction has different regulatory requirements, risks here include not only laws that currently exist, but also laws that might come and the lobbying that might be necessary to prevent unfavorable ones. The ideal process for listing tokens. The ideal process should require first a strong customer demand, that is, not just short-term demand, but long-term demand. There is generally a ton of interest in a token right after launch, but that generally tends to taper off, except in extraordinary cases. Second, the code for a token should be audited and then compiled and run in an isolated, secure environment. Any sort of upgrade should be run through the same process. Third, the number of confirmations should be high, or otherwise there should be guarantees from the token founders for any losses due to chain reorganizations or ledger resets. Fourth, the coin should clear any legal regulations that are currently in place and any regulations that are likely in the near future. This is probably one that the exchanges are best at, as legal expertise tends to be cheaper and easier to get than security expertise regarding the token software. Conclusion. Given the above, it's obvious that there are not enough security audits going on at exchanges. Otherwise, the Ethereum bug from the hard fork last week would have been caught by anyone competent. Instead, it looks like exchanges are blindly running whatever software that the Ethereum Foundation tells them to run, or worse, just relying on Ethereum. What this means is that very few exchanges are responsibly listing coins and that there should be a lot more delistings as security incidents become more frequent and trading volumes become lower. The exchanges that are hoping to avoid large financial losses without proper security audits will likely learn the hard way that hope and pray is not a great security strategy. What CoinFloor has done is not isolated. There have been hundreds of coin delistings in the past year, including BSV, Digibyte, and many others. The cost, both in terms of maintenance and risk, are simply not worth it at a certain point if an exchange wants to survive. Given that trading volumes are dropping and the increasing risks of each separate token, we should expect not only to see more daily listings, but initial listings themselves to be less frequent given all the risks and costs for new token listings. All right, that was a read through of my article. Let me see if there are any questions. Let's see. When are they stealing funds? Probably right after the hard fork on February 2nd. How does one exchange know that you send your BTC from that exchange to a Wasabi wallet address was newly generated and never been used before? It's if it's going directly to a CoinJoin. So CoinJoin transactions are pretty obvious, and they have a certain signature. All right, is Hex the best scam of 2019? No, I thought it was a terrible scam. There were much. I think Algorand was a much better scam, for example. Would you say big players as FB, central banks, and other companies are coming into agreement and will shape the law so that only their crypto schemes can sort of work? I mean, they'll certainly try, but again, governments are very, very slow to move. And usually there are people in government also that also own Bitcoin, and they'll try to prevent it. Is Jimmy just explaining here how a scam works? Kind of. All right, let's see, or how that particular one does. All right, I think that's about it. Let me show my stuff once again. We have the Little Bitcoin book available on Amazon and Kindle, paperback, and audiobook. We have the Spanish version, El Pequeño Libro de Bitcoin, and the Portuguese version, O Pequeño Libro de Bitcoin. That's the audiobook. My seminar is in Las Vegas, February 20th and 21st. Please apply if you are so interested. I think the next two conferences I am going to our Advancing Bitcoin. This is in London, February 6th and 7th. And yeah, there's a lot of people that will be there. A lot of core devs, it looks like. Wow. And yeah, it's going to be a very good event. There's also Unconfiscatable. This is Tone's conference in Las Vegas. And of course, there's a poker tournament and all that. And that's where I'm holding my seminar. Please apply if you are so interested. Yeah, so that's a lot of different things that will be happening in the next couple of months. After that, I think I might have something in April. I definitely have a bunch of things in May, possibly in June. We'll talk about all of that. All right, so that is about it. Thank you guys for watching. It's always a pleasure to hang out with you guys and talk about Bitcoin. I think Christmas is coming up in a couple of days, so I think I'm going to do a show with Tone tomorrow, but if I don't get to see you guys, thank you for watching this year and getting through 2019 in one piece. If you managed to hold on to your Bitcoins, congratulations, you've done very well. If you held on to altcoins, I'm really sorry about that, but hopefully you learned a lesson. And yeah, it's been we're coming towards the close of the year. We'll have one more show before the end, but I want to give my appreciation to all of you that are watching this channel. Please pound the like button and subscribe. This song is